Everybody, what's up? We are back with another portfolio update. So, I put a little bit more effort into actually visualizing some information about my portfolio. So, some things I want to go over. First of all, I have my breakdown of my overall portfolio right here. And I also have the starting value of 2025. So, we have the lifetime returns, year to date returns, and then also just returns per year. So, I started this account in October or November of 2023, and it was just money markets. 2024, I started buying stocks. I think I bought my mutual fund about halfway through the year, and then I started buying stocks around October and November. So an just over 8.5% return in 2024, and then so far in 2025, we are at 7%. Looking at the breakdown, we could see I have about a third of my portfolio in ETFs, another third in money markets and bonds, and then the rest in stocks. I have the stock information right here, as well as actually I have everything broken down into one pie chart here. So one big change I did recently was I sold my mutual fund that I had previously, which if you watch any of my other portfolio updates, you'll see that I had one mutual fund that was supposed to be for dividend growth, but in the 6+ months that I've had it, I think I got 40 or $50 in dividends from it. So I just didn't really think that was worth it. So I split it up and basically evenly distributed it between these four ETFs here, which I'll go into in a moment. Um, and all of them already are up a significant amount. I put 1250 into each of them, and all of them are over 1300 right now. So I would say that's a significant improvement from the other mutual fund I had. But one thing to note here, Celsius, I did put more into, which if I could find. Oh, so this is organized by largest positions to smallest. So some things I updated, I added 5 more shares of new holdings since the last time I did an update, I think. Also, 5 more shares of Snapchat. I got a dividend of Dollar General, so there's a slight bit more there. I might have bought another share of that too, I'm not sure. And then other than that, just the new ETFs, and I put 4 more shares into Celsius. I think I'm done with Celsius buying for a while now because I do have a lot more of it than I really wanted to. And most of that was just for the sake of averaging down. So there is a bit more in there than I want. But actually, let's go into something. So first of all, Sarins has come down a significant amount from its high of right around 27. Now I sold basically I put about $200 into it and I sold about 250 worth at $26. So I returned my original investment and more already. And now I'm just holding what I have left. I am expecting this stock to go higher in the future now that we have a lot more value into it. I think this next earnings report is going to be fantastic, honestly. But overall, expecting big things with the company for this year. So I think it will be going a lot higher from here. But um, yeah, doing okay there. We can see there was a bit of support found right around $12 a share, and now we're at just over 14. So overall, not too bad. Not too bad. Celsius, which I did just release another review of today, earlier today, is looking at some new lows, which again, I do think we will break out of these at some point, but it's just kind of a matter of time of when that will happen. Looking at some other holdings, so Chewy has been doing pretty well so far, and I honestly haven't really looked into it much, but basically only up. I think I drew this sort of wedge area the first time I reviewed it, and they have just been rising right through it since then. So no complaints here. I'm up a lot on Chewy. Yeah. Other than that, there's nothing else I really want to get into. Hood and PayPal. So Hood just recently hit $50 a share, which is awesome because I bought it at $23, which means I'm now up over 100% on Robinhood, which is fantastic. And then PayPal is at, they were just over $90 a share, which is awesome. And I'm pretty sure I don't know the first time I reviewed it, but it was a couple months ago, probably in October. I think I bought it right around $80 a share, so up a decent amount on them as well. But overall, that's all I really want to go into with the portfolio. With the Robinhood side of this, with my dividends, looking pretty good so far. If we go into this, you could see this past week has been very good, returned about 4.33%. And that was also with a smaller dividend than the weeks prior. So looks pretty good um, for them. I think I'm very close to breaking even. After these dividends came in, which I got about 450 in dividends last week. After those dividends came in, the ETFs actually both went higher. So I think I am just about even on them now. I'm not sure about for this upcoming distribution, which should be um, on Monday. I'll probably be down on them again, to be honest, but not really sure. It depends how much they are. But overall, it looks pretty good for them. I don't know how much longer I'm going to be doing this kind of experiment for. It really just depends on will I start making more on them, because right now I basically have slightly lower equity than what I put in originally. So it's okay for right now, but overall, I think the NAV decay, even with reinvestments, just isn't really there for me at the moment. So, although the reinvestments have been going very well, you could see right here I have total shares. I started with 53. I'm at 55, just under 55 and a half right now, total shares. So, overall pretty good. Obviously the dividends are kind of vary wildly per week, so there isn't really too much big changes in the dividends yet. But I think if you held this for like a year or so and your number of shares increased 50% or more, which does look like it is on track to do so, um, I think you could see some big gains. And honestly, it is a pretty decent way to kind of passively increase income. Now, the thing is, it's all about doing the reinvestments, because if you don't do the reinvestments and you just take the dividends out, then your position is going to decrease 50% per year. But if you reinvest and you continuously reinvest, it's honestly a pretty solid bet, I think. I mean, obviously, for right now, um, with the way the market has been since I bought, which was about 6 weeks ago, if we just go into, um, I'll just do QQQ because, oops, I'll just do QQQ because it kind of follows them. So I kind of bought it. Um, I'm trying to think right around here. So actually, we are just about even, and I think today I might be even on it. I just update it week to week, so we'll see again on Monday. But overall, I basically am even on it, but I kind of bought them at a rough time where the market was basically at its all-time high. So overall, it's basically just a matter of when the reinvestments will start canceling out the asset value decay and whatever. So overall, that's all I really want to go into. Portfolio looks good. Again, very solid returns so far year to date. I hope this can continue. So far, most of the stocks that I have, actually all of them, are looking pretty good. And oh, one more thing I wanted to go into was the ETFs that I bought. So going here, sorry for clicking around so much. VMFO, starting off with that. This is a momentum factor ETF. So it basically, they invest in stocks that have seen periods of very solid growth, which I think is really cool. So basically, it's stocks that are doing very well in their stock prices, they buy them. Now, that is really good, and I do honestly like the idea of it. However, one thing that I'm a little skeptical of is they could just be buying a lot of overvalued stocks. So that is one downside of it. But overall, I think it's a pretty good thing, because usually when stocks are performing well, they continue to. That's just kind of the trend. And then I also bought VOOG, which is just S&P 500 growth. This has a fairly longer history of basically just going straight up, other than some specific cases, but overall looks pretty solid for a long-term hold. And then VFQY, I don't know if that will actually show up here. Okay, so this is quality factor ETF. They basically buy stocks with very strong financials, which if you follow my channel, you know that is exactly what I like. So as soon as I saw this ETF, I wanted to get into it. And then finally, I have Vong, which is just a Russell 1000 growth ETF, just to kind of get some mid caps exposure in there as well as more large caps. So overall, it's basically the exact same thing as Voog, but a little bit more exposure to more stocks. So I like it. All of them, I think this is a fantastic balance, especially if you're considering just getting into investing like as a beginner. This is a great set of ETFs, at least in my opinion. Obviously, do your research on them. I did a significant amount of research to kind of pick these out as the ones I want to stay in for a long time. So I think if you are interested, definitely look into them. All of them are really, really solid. Their historical returns are really good. But yeah, that's about it. Also, I believe my bond. Oh, this is not up to date. The money market and the bonds. If we go here, it is. One of my bonds expires, or I shouldn't say expires. Gets like redeemed today. So after today, this will be a significantly smaller amount of my portfolio. And I didn't want to have, right now I have three at $1,000 each. I want to only have two. And then eventually in the future, when my account's larger, I'll probably go to 3 or 4,000 at a time. But for now, I only want two. So by tomorrow, I believe I'll have a decent amount of extra cash to invest. So we'll definitely see about um, getting some new stocks going. I do want to have, so right now, I believe if I just do a quick count of these, I have 15 stocks at the moment, not including the ETFs. I would like to try to have between 20 and 25. So with the position amounts that I have now, that would probably require me selling off a decent amount of Celsius and maybe Chewy as well. CRNC, I think there's too much potential right now to sell. Plus, I already took profit on them. But Chewy, I'm up a ton on, so I probably will sell them a little bit within the next few weeks. And then Celsius, I honestly think as soon as I'm breaking even on them, which hopefully will be soon, I'm going to sell probably a quarter of the position at least, maybe a third of the position. Not because of lack of belief in the company. I do really like the company, but I just want to put the money in other places and also still have a decent amount of a cash reserve, which right now I have 2,600 as a cash reserve. Um, if I buy 5 to 10 more stocks, which I want to have 20 to 25, I think I said that. But if I want to buy 5 to 10 more stocks, I'm probably going to need at least 1,500, which would probably take me below my ideal amount of cash in reserve. So that's just another thought. But that's basically the plans for the portfolio coming soon and how everything's going so far. So, yeah, that's about it. Thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.